in Hong Kong, I think the market will continue for green bonds, largely because the financial infrastructure here is set up for all these types of instruments. So in a way, it's very easy for large organizations like MTR and Linkri to get involved in this, and really find it's a very low cost way of financing major improvements in infrastructure that is either new or existing infrastructure that needs to be upgraded. So from that perspective, it's a very solid investment. But if you look at the bigger picture for where Hong Kong sits, I mean, within the Greater Bay Area, there's a number of ready-made kind of investment projects there to be had. If you look at the history of the Pearl River Delta, when it's industrial past, when it used to be the factory of the world, there's a lot of cleanup that is now required to rectify a lot of the legacies of the past. So you look at places like Zhongshan and Dongguan, where the site remediation costs are quite large, but through mechanisms like green bonds and other financing mechanisms, the capital can be released for that. Then you've also got a burgeoning environmental technology industry that is springing up in Shenzhen. And again, you could see where the investors' money would be very readily accepted, which would generate pretty good returns for what they put into it. And then lastly, the whole Greater Bay Area has sprung up a series of eco-cities like Shaojing, which is really kind of looking at how you start designing and building cities in the right way from the start. I guess the bigger picture is really, when you see about how the whole world is evolving around this. China has a huge opportunity with Belt and Road project, where if the project goes through to completion, it will have access to 30% of the world's GDP through the different countries that it traverses. And there again, you'll see the attraction of green bonds being issued outside of China, which to date has not really been that large. I mean, a lot of the bonds issued in China tend to be for internal purposes. And with this opportunity here of expanding wider, really it increases the opportunity for releasing capital into very significant improvements in the planet. The challenges are, it's really about defining the projects. You see, because at the moment, a lot of these types of bonds have gone into projects like fossil fuel projects, fossil fuel power stations and hydro projects, which on the one hand are producing energy, which is much needed. It still has a very negative backlash in terms of climate change, deforestation, displacement of habitats. So I think really it's a case of defining the projects. Once they're defined, looking at where the investment go, where the impact happens within the context of the project. And then lastly, monitoring and verifying it. Because I think the challenge now has been that there's a lot of good projects in paper, but once they're actually executed, it's about seeing whether the benefits truly are reaped.